Hey, everybody. It's Coach Cav just coming back on to do a live session with Rochelle and Chad. Coaching calls that were scheduled the 15-minute Ask Me Anything. So just a little background, as I've mentioned before, I've got some ads running that are allowing individuals to schedule 15-minute. Hey, ask me anything or any question or concern or objection you have about investing in Airbnb. If there's something that you don't understand because you're new, or there's something that you want to grow or expand on, and you're currently investing, that's the purpose of putting these calls on. So over the past 2.5 weeks, I've taken upwards of about 50 or so calls, right, with investors, both new and experienced, as far as Germany in some cases to the Dominican Republic and here stateside. So I've spoken with a number of investors and added some context and some value to what they're doing in their Airbnb journey. So I've got Rochelle and Chad here to participate in a live, unfiltered, unforecasted discussion on some of their concerns or questions they have. And just for some background, Rochelle just recently participated in a couple of investments, some turnkey efforts that we have that are coming up. And Chad actually just purchased my Airbnb rental arbitrage course. He's in Germany right now, where it's a little bit after midnight, going through the course, and decided to hop in and participate and ask some questions and put me on the spot. So with that sets the stage. So I'll let Rochelle hop in and we'll have a live chat. All right, Rochelle, seat's yours. What you got?
So my first question I wanted to know, so I have a business set up. I'm a writer, and so I have a website with my books on it and everything. However, because I didn't classify my LLC as anything other than the books, I wanted to know, should I register everything that I'm doing with you, the turnkey business, should I register that in my business? Or just use, I prefer to use my own name, just me as an entity rather than a business. So what are your thoughts on that?
Well, first question is why do you prefer to use your name versus an entity?
Well, I don't have I don't generate enough in sales to where I feel like I need a business credit card or anything like that. So I don't have a business account, nor do I have a business credit card. So, and I just use, whatever my gains and losses from the business on my personal taxes.
Right. So you're set up as a sole proprietor versus an LLC. So let me hop back to your first question with respect to the setup of your entity. So one thing to understand more specifically about what we're doing in short-term rentals, and more specifically this model, right, being turnkey, where it's more focused on accessibility and leases that we don't own, but we're providing an accessible accommodation to guests. And in your case, you are subletting a property that's being leased, so you don't own the asset.
Mm-hmm.
First thing to understand about that is that there's no personal liability in there, right? So at this point, it's not necessarily necessary to establish an LLC.
Okay.
Now, for anyone that's focused on growing a business, right, which I think we all are at some point, you should work towards getting an LLC. And the reason why is because let's just say for some odd reason you make over $50,000 this year in income, right? At some point you reach an income threshold to where you will need to seriously consider moving from an LLC or C Corp into an S Corp, right, for tax purposes. So establishing an entity should always be part of the discussion. Then the other side of that too then becomes the business credit, right, side of it. And regardless of where you are now and how you feel about it, you should always work towards establishing business credit uh, with any business that you're running, because at some point, right, you want to leverage funds and assets that are not your personal funds and assets in order to take on some of these investments, right? And then having a business credit card with a low interest rate, a high paydex score, um, and those trade lines established will enable you to do that.
Okay. My next question is, can you explain to me
Mhm.
how you recoup the funds? So I invested in a turnkey, um, paid whatever the buy-in is. And so between having to pay the monthly rent
Mhm.
and the funds from, guests, how does that work?
Right. No, great question. So think of it just as you are in your place right now, right? You've got you've got your monthly expenses that are tied to your home, so that part of it doesn't change. Now, the difference here is that your income in your case is paying for your living accommodations. The guest income in this case through Airbnb will pay for and cover your expenses for that place.
Uh-huh.
The difference here is that we are projecting, as you saw within the numbers there, that our income uh, will have greater income than our expenses. So in most cases, right, we're estimating anywhere from 1200 to $2,400 in income a month. So if you deduct, our expenses from that, you get your net profit, which then obviously grows to your yearly profit in this case.
Okay, okay. Um, I believe that was all the questions. I have more, but like I said, they're more specific to this, and I want to, you
Hmm.
know, give some time for additional questions. So I think I am good to go.
So
So thank
you,
you.
you mentioned something about taxes too in your initial note. Did you want to cover that at all, or did you want me to just
No,
briefly
I think you
talk
answered it
about it?
already.
Mhm.
Yeah, whether I should use my LLC versus my own. So, but yeah.
Okay, and I'll gloss over it because I always think it's an important part of this discussion, especially so as it pertains to the LLC. And just a disclaimer: I'm not a tax professional legally, but I've done this enough times and spoken with enough uh, tax professionals to give some sound advice on this. But one thing to understand about short-term rentals is it's considered a non-passive activity, right? That non-passive activity is filed on Schedule C 1040. Normal real estate investments are filed on Schedule E 1040. The difference here to understand is that 100% of your expenses, due to the nature of short-term rentals being a non-passive activity, then go into the loss column. So when we understand the two rules of taxes, right? Is it ordinary, meaning everybody does it, or is it necessary, meaning it's necessary in order to make a profit? Then the short-term rental activity and everything that we do, right? We've got to pay rent in order to make a profit. We've got to keep our utilities on in order to make a profit. We've got to pay the housekeeper. We've got to pay the maintenance guy. We've got to, have ESPN, a magazine, and Netflix in order to make a profit. So when we put all that together on paper, we can estimate out, right, year of opening an Airbnb. We can aggregate and say, our monthly expenses are going to be $2,000. So 2,000 times 12 months gives us 24, is it $2,400 or $24,000 in losses, right? And that's just on the surface. So that's not counting everything else that's going to come up. But the key point to understand there is that all of that goes into the loss column. So your Schedule C losses then help offset your taxable W-2 income, right? So that's where the beauty of this lies, in my opinion. And that's why this always changes when I talk to investors from hey, I am happy to have an Airbnb to now, hey, this is a serious tax strategy, right? Because if I'm in a higher income bracket and I take on one or two of these investments, and due to the amount of losses I'm going to take over the course of 12 months, it's going to reduce my taxable W-2 income, then that's a pretty significant loss that you're going to have. And just remember, right, that loss is only on paper, right? That's on paper due to the inventory that you brought into, and then what happens to your net profit from the business, right? It isn't even touched, right? Because your losses first offset your taxable W-2 income. So this is no different, right, than a Walmart or Amazon that have billions of dollars worth of inventory in a warehouse that exceeds their profit, right? So the losses in this case, just like us with the short-term rental inventory, exceed our profits on paper, which then offsets our income. So those net profits that you make aren't actually taxed in some cases, right? Now each situation is a little different, but that's sort of the gold nugget here, right? So I always want people to understand that your monthly profit margins are good to pay attention to. And yes, we want to be profitable, and that's the goal at the end of the day. But the year-end profit margins are more significant, right? So this becomes more of a long game than it does a month-to-month game. And then when you start to leverage short-term rentals as a tax strategy, as in our case, our adjusted gross income, it's well below $30,000 for a year, right? So we're not necessarily doing anything wrong, but we're just benefiting from the laws that exist, right? And short-term rental investments do provide a gateway into a unique tax strategy to help reduce your tax liability. So just keep that pinned in the back of your mind as you look at these investments and what it costs over time to invest in these, and then what does that mean at the end of the year for your taxes and your business.
Well, that's all I had. Thank you.
Awesome. Thanks, Rochelle.
You ready for me?
All right, Chad, we'll hop in.
All right, bear with me here because I'm very fresh. So after going through a few of the course classes, I have some questions. Okay, so my first question is, obviously we're both in the military, and so I'm trying to wrap my head around how I manage both this, running a business model like this, and serving active duty. And so I was wondering how you managed to balance that out, given that you've scaled to such a big business. How are you balancing that?
Teammates. Yeah, I've got great teammates that help out. A lot of behind the scenes stuff that's happening. I typically take care of a lot of the upfront administrative stuff where I'm bringing in the deals with investors and then closing them, getting the initial messages out. But once that happens, the football behind the scene is being handed off to another business partner that's starting to put together, like the deal in Louisville, design boards for each of those places, starting to coordinate flights, starting to talk to vendors on the ground, and coordinate delivery of all of the resources needed.
Okay, so you're really at this point you're in more of a bringing in outside investors in mode. You're not really doing your own Airbnbs anymore. You're more so just finding deals to bring investors in on.
Yes. Now there still are, quite a few Airbnbs in the portfolio. None that I directly manage day to day, but I do have visibility on everything that's there.
With the so what is, I guess my next question is what is the difference really between like me coming in as an outside investor on a property you've already identified and then me doing this on my, I guess me doing this on my own? Is it well, so I guess what's the benefit of me doing this on my own if you're doing a lot of that legwork?
Time.
Um,
It's our greatest resource, time,
yeah.
right? So a number of investors that do come in passively come in for that reason. One, in most cases, it's extremely difficult. I can't tell you how many messages I get a day or see across multiple Facebook platforms where folks are looking for homeowners or how to get into their first Airbnb. So understanding that, right? We provide a solution to that, and that becomes one of the main components of our business, where we'll source properties with homeowners and/or private investors, and then in some cases we'll offer them pre-lease, meaning we will build an investment packet and bring investors in prior to the lease starting, so they essentially get some say in the build out of the property. And then in other cases, like the one you saw in Houston and several others that I've floated over the past couple of days, we will take properties on and then we will run them for about 90 days. We'll let them mature, get some positive income, get their place in the market, and then we'll offer them to investors as
Okay.
as a true turnkey operation.
My next question was usually what happens with the inventory, that being like the furnishing and all that stuff at the end of a contract? Is that usually moved to another property? Is it sold? How does that usually work?
No, that's a great question. So in most cases, we'll take it with us,
Okay.
if necessary, and proximity to the next place that's coming up. If it's cost effective to sell it, then we'll just sell it. If not, we'll move it. But we have not honestly crossed that bridge yet in terms of a lease agreement expiring and having to move out of a place and do something with the furnishings.
Okay. Um, how long have you been at this now?
A little under 4 years now. Started back in 2018, early 2018. So.
And I guess how long did it kind of get you to really get some momentum going, kind of get some steam going?
So that's interesting, right? Because I started off in the apartment complex game, as I call it, right? Fishing for apartments in different cities, from New York
Mm-hmm.
to DC, down to Savannah, and so on. So with that model, and that's why you'll see a lot of folks looking for these corporate lease agreements in city center, which I'm not opposed to, but they're not as easy as one would think they are.
Right.
But they can allow you to scale, right? So what happened was two things. One, we were able to get into a lot of places in a short amount of time, but we also got kicked out of a lot of places in a short amount of time, right?
I remember we had that conversation like maybe a couple of years ago when I first talked to you about this. I remember you saying the subleasing, in apartment buildings can be a little difficult.
It is, and it's doable, but your business then has to establish a paydex score, reputable trade lines, and then in some cases they'll require you to have that established for up to a year. So it's not as turnkey as one would think. Now, if you have resources that are able to get you into a corporate agreement with an LLC, then that's a way in. But my point to anyone investing in apartments is always, look, don't rush to get into $100 night market, right? That's not where the money is. The true gold is in homes where you can have unique value or have value in a home, or create unique value in the market that doesn't exist.
Right. So as far as how you're looking at markets these days, is you just staying away? You're staying away from really big cities and kind of getting more into these smaller markets where there's still opportunity. Because I went through your segmentation strategy and how you're kind of creating that unique value in the market. And so I could see how something like that could really work in a place like, even Augusta. And I actually I did was I went and I looked in Charleston, South Carolina, because it's close to the water, and I imagine people vacation there. And so I started like filtering stuff down, and I'm like, wow, yeah. So I started out maybe for like 70 properties, and then it went down to like 27, and then I ended up at like 2 once I added some of your strategies in there. So I definitely saw the value in that. I guess my question, or I guess I'm looking for some advice, like being that I'm very new to this, but I do kind of want to, like, I'm looking for a post like military thing to do, right? Preferably do not want to continue to work in IT after I get out of the military. So looking for something that I'm very interested in, and real estate has been something I've been interested in for a few years now. How should I ease my way into this? Should I just, start as a passive investor just to get a feel for it, and then kind of like try to build out my systems? Because I've never really built a business before. I've never really had to deal with people on that level. So do you have any advice there?
Yeah, and let me circle back to the first point you were making about seeing the value in the different markets, big versus small. So we don't discriminate in markets, right? And it's simply because of that strategy and understanding how to assess gaps in any market that'll allow us to take on a home in Enterprise, Alabama, right, where Fort Rucker's the size of a living room, or a unique destination location as a Charleston or Savannah. So regardless of the location, right, we've got the strategy behind us to find value or create value in those markets.
Yeah, sure.
The second point with respect to getting into this, the thing I'll tell you, and remember this, if you don't remember anything else, right, we are moving more toward accessibility over ownership. So when you think about that and understand that, think about the sharing economy as a whole, right? And all of the different services out there that exist within the sharing economy. Yeah. And then think about now operating Airbnb and all of the different services that you can then tie into an Airbnb, right? And you then turn an average Airbnb into a multi-purpose space that's operating in the sharing economy. And if it's now accessible, right, and it doesn't have to be owned, in my opinion, right, that's the way into the future as it pertains to not only short-term rentals, but just from an economic standpoint. So if there's anywhere you want to look to position yourself in terms of understanding not only short-term rentals, but more of the sharing economy concept, that would be where I would tell you to begin to leverage your skill set and then what you're looking to do later on.
Okay. Yeah, I'll chew on that. Yeah, that makes sense. Okay. Hold on, let me make sure I don't have anything else before I say I'm done. I'm gonna get back on one of these calls after I finish like the entire course, because I know I'm gonna have like I'm gonna have a laundry list of like specific questions as far as like the processes go. And I reached out to a couple of people in the group, and so when I get back to the States, I'm gonna sit down, with people who have already kind of started this. What's your long-term plan, if you don't mind sharing?
I would say I don't know, but that's not a good thing to say publicly, right? But
Yeah.
no, long term really is a look into the sharing economy, right? We want to create unique value and unique accommodations within the short term rental space. But on top of all of that is really the long term push for me and my wife is to get into taxes, right? Enrolled agents, and then come back to the real estate short term rental side more specifically, and provide coaching and consultation services for investors, and more specifically in this space.
Okay. Yeah, that makes sense. Oh, I did have one more question. So you were talking about the taxes earlier, right? Do those same tax breaks apply as a passive investor?
Yes.
Okay. I didn't
Yes.
know. I'm not, I pay I pay my regular like income taxes, but I
Mhm.
didn't know if that specifically applied to people who are actively doing this or just passive investors anyway. So basically what you're saying is all of my expenses throughout the year in a property can be written off my W-2 taxes or my
Yeah.
W-2 income.
Yes. Yes.
Even if, I'm
Go
sorry, go
ahead.
ahead.
Go ahead.
I was sorry, even if like let's say I had these in an LLC, would that still be the case or only
Mhm.
if okay.
It the type of entity doesn't matter in this
Okay.
case, right? The rules or the tax rules simply it's about the activity that's
Right.
being conducted and how that's applied,
Okay.
right? But my thing is for any successful business, right? Taxes sit in the middle of their ability to be successful.
Yeah.
Period. So at some point we have to have that difficult conversation about taxes, and more specifically for us, uh, our tax brackets are slowly increasing,
Right.
right? And just like any other investor or any other household that's being managed, where we can reduce our tax liability through investments that are making us money passively, we're going to take advantage of it. So at some point we all come back to this discussion. What does this mean from a tax standpoint? And at the end of the day, to me, that becomes the single biggest advantage of doing short term rentals, and then it doesn't become a weird question to understand why we take on so many investments within a tax year.
Right.
It's very strategically planned at this point to nip right at the taxes that we make from our W-2 jobs.
Yeah. Okay. Um, I think that's all I have for now. Like I said, I should be done with the courses this week. And I'll definitely have more questions for you that I can either, email to you or I have no problem hopping back on live. Do you have a Clubhouse? I just got on Clubhouse today.
I do it. It's at Coach Cav.
Okay. I'm gonna add you on Club. I just got back on Facebook. I just got back on Twitter. I just got back on Clubhouse. So I'm trying to figure out how these apps work all over again. And I'm trying to do some stuff on Instagram too. So I would definitely be in touch with you, brother. I appreciate I appreciate you one for not only doing this, but also, you have like a lot of knowledge that a lot of people would charge for or pay for. So I appreciate you doing it, on your own time for free. Then that really means a lot. And once I get all this, I just wanted you to know, once I get all this down, I will pay it forward. So um, that's all I have.
Good. Thanks. Well, I certainly appreciate it, and giving value back is a pleasure of mine. So please let me know once you've come to a stopping point and you're ready to schedule a strategy call to work through any questions you have.
Yeah, definitely. Oh, let me ask one more question before I get off. So next, what do you need from me as far as like the Houston opportunity or like the Arlington opportunity? Like what are my next steps? What do I need to do if I want to invest there?
So the way those look is once you're interested, what we do is we have a MOU, a memorandum of understanding
Mhm.
that outlines the structure of the deal.
Mhm.
It goes through the fee schedule for the deal. So we get that signed, and that's simply an agreement between us to say, hey, we in like kind agreed to do business. So we get the MOU, the funds against the investment get wired, and then once that happens, we then create the operating or partnership agreement that's going to govern the property and our relationship. So that operating agreement then gets into the weeds of the details of the investment across the 3 or 4 or 5 years that it's going to be in existence.
Yeah.
And then there's some other admin legal stuff that we send out, credit card, insurance, ACH authorizations that then allow us to go in and set your account against some of the utilities or other expenses that are associated with the investment.
And do you manage the Airbnb account, or do I do that?
Either, right?
Okay.
I've had investors that came into turnkey efforts, and then they wanted to start their own profile, which I always encourage, right? If
Yeah.
you plan on growing, then it's beneficial for you to create a profile, and then at some point, what we can do is we turn one off after we merge the calendars, and then all the new reservations come in against the new calendar, but those dates from the old calendar are still blocked. So very easy process. It's just a matter of deciding when that point is that investor is comfortable with taking on their investment.
Yeah. Okay. I'll have more questions as far as that goes too, but I won't take a more live time with that. Yeah, man, I appreciate it. That is all I had. I'm gonna go ahead. It's about 1 o'clock. I'm gonna go ahead and clock out for the night. But I appreciate you, man.
Good. Thanks, Chad. So I'm going to hop into a couple of the questions here. One, I see, can you have multiple businesses under an LLC? Yes, but in most cases, if you talk to most investors that operate multiple businesses, especially if they're different markets, then it's always best to separate them, right? So for example, I have a LLC that holds all the lease agreements, and then there's an LLC that does the cleaning, and then there's an LLC that does the property management, all within the guise of short-term rentals, but different markets. So they're separated. So then each of those entities can contract out and do work against the vendors that are associated with it. But I would say in this case, if they're conducting different business, then separate them. Hopefully that answers that. Kim says, thanks for going through the taxes opportunity. I have a partnership LLC with my husband. Husband has a W-2 and I am independent. Would it be beneficial to have the lease under my husband's name? If the taxes are filed jointly, it doesn't matter who holds the lease, right? The funds are coming out of a business account for that specific purpose, then it will all go into the loss column against the business. So in this case, it doesn't matter as long as you're filing jointly with the investment. Next question: can you can figure out what's missing in a market, i.e., size of unit, amenities, services, extra, but how do you confirm what's missing is what's wanted or needed? That's the challenge for me. No, so that's a great question, right? So the overarching answer to that is, look, you will never be one of one in a market unless you do something fanatic like I've done with a property in Charleston and a property in Savannah by combining the two to make one unique listing that doesn't exist anywhere on Airbnb, right? You probably won't find a Airbnb that crosses two state lines and provides unique accommodations on both ends, right? So unless you do something like that to where you create that unique of a value where you're only operating one of one in a market that can offer that, Otherwise, you'll never be guaranteed that you're the only place in the market offering something. But the goal is always to be one of a few versus one of everybody else, right? So as we work through our process in a market and identifying gaps in the market, it's okay that we're competing with 7, 8, or 9 other properties for a certain traveler demographic. That's a much better ratio to book than competing against 4,000 properties, right? And that becomes one of the central problems when you're in city center anywhere, right? And you have a bunch of 1-bedroom or studio apartments. And I always say, listen, you've got to always assume 3 things. One, everybody's got a nice, clean, great looking listing, right? Let's just put that on the table. Everybody's going to set up a nice, great place. So something's got to differentiate all those great looking places downtown Atlanta. The second thing is that you can't overprice your value in the market, right? So you can't go set up your nice looking place and then go price it based on what some third-party tool's telling you or what your neighbor next door is telling you, right? You have to price to the value you offer in the market. And then to dive deeper into that, you have to understand your monthly operational expenses, your daily operational expenses, and then what are your targeted profit margins and targeted occupancy rates for that property, right? And where does that lay on top of the value your place has in the market? That's where your pricing should start. And then the third point, and I think one of the most important ones, is that the value you have in your market today, it's only as valuable as today, right? And you can coin that. But the reality of it is this is a popular sport, right? Everybody's doing it. So back to my first point, that market's saturated and every place is nice, every place looks good, it's clean, right? It's got all the goodies. How then do you separate yourself, right? So at some point, you've got to understand how to find those gaps in the market and then make yourself, right, one of a few in the market versus one of everybody else. So hopefully that drills down enough on that specific question there. But great question. I love talking about finding value in markets because it's not talked about enough, and I don't think it's well understood. Next question says, say 3 bedrooms are missing. How do you know there is a demand for it? So that's another great question, right? So another thing we do is we look at and assess the traveler demographics in every market first, right? So regardless of which market you go to, the traveler demographics become important to understand on the front end. And look, at Denver, Colorado, that's next to a ski town in the major hospital, will have a different set and subset of travel demographics than a Montgomery, Alabama, right? So you've got to understand the traveler demographics in the market, because then that helps you to understand some of the trends in the market, right? A destination location like Savannah, Georgia, we get a lot of large groups because it's a destination for either weddings or bachelorette parties or groom parties, right? So understanding that leads us to the selection process in terms of the homes we go after or how we spread out the head-to-bed ratio, right, in any market. So I wouldn't say so much be focused on a 3-bedroom home as much as understanding the travel demographics, and then getting a good head-to-bed ratio to ensure you're competing, right? A level up and a level down. And let me walk through that real quick, right? So when we look at markets, and more specifically a home, regardless of the bedroom size, you want to compete, right? In a 1-bedroom, you want to compete with 2-bedroom value, meaning I want to offer more value to a group of people that would typically need to stay in a 2-bedroom place in my 1-bedroom place, right? So now I'm competing against two traveler demographics, right? From a head-to-bed ratio standpoint. And if you're in a 2-bedroom, you want to ideally compete from a head to bed ratio with a 3-bedroom. So you may not need a 3-bedroom place to compete in a 2-bedroom market, or you may not need a 3-bedroom place to compete in a market. So you can essentially get into any bedroom size, and then you can affect the head to bed ratio to your advantage. And let's just be clear about this, right? Head to bed ratio becomes the biggest money factor, right? You'll get more for a home that sleeps 16 than you will for a home that sleeps 2 any day, right? Because at some point you create unique value with a significant head to bed ratio. And there's preferences out there as to not having a lot of traffic here or having traffic there, but it's the nature of the business, right? People shop for value, so you've got to add value, and where you can add value and capitalize off of it from a monetary standpoint, then do it, right? Don't be married to the place you set up. It's just a business that's running. A hurricane can come through and destroy things just as worse as a guest could do. So you take your chances either way, right? Next question is, do you use second or third party listing platforms, or do you have any direct booking websites that you had built for properties? So the strategy here is Airbnb 1 to 5 day stays, VBRO 5 to 30 day stays, and Facebook Marketplace. Facebook Marketplace. If you're not listed on Facebook Marketplace, you're wrong. It has 60 some odd billion users per day, and you can run targeted ads on Facebook Marketplace to get your place in front of your target audience, right? I've gotten more bookings through Facebook Marketplace in some cases than I've gotten from any of the other major platforms that the places are listed on. And that's because you can set targeted traveler demographics, set targeted ads to target them, and Facebook will do all the work for you and drive traffic back to your place. But no direct booking. I don't do it, and it's not that I'm not a fan of it, but the reason why is because there are only certain markets, right? In my opinion, I'm only giving you Cavs theory here, but there are only so many markets that you're able to do really well in with a direct booking website. Those are in historic vacation rental towns, right? So if you look at a Panama City Beach or Myrtle Beach, these places that have been around doing vacation rentals forever, the traveler demographic that still goes there yearly still believe in those personal relationships, and once they establish those in places they see and they like, then they typically come back. Every other place you have to build a brand, which there's nothing wrong with that, and it's not that there's not a way to do it, but that requires your time, energy, effort, and money. And I encourage you to go for it, right? If that's a thing you want to do. But what I'll tell you is that, look, you can be just as effective by listing the place, running a targeted ad on Facebook Marketplace, and you get the same result that somebody that's spending more time and money on a direct booking website to market their place. But it's all user preference. I don't do it personally. It's time consuming, and I think I get better results through Facebook. What language do you use to get apartment complexes to say yes to you starting an Airbnb service in their property? Additionally, if you live in a small city, would you recommend jumping into a lease? So I am not a huge fan of the corporate lease structure in apartments. And the reason why is because, look, you're never guaranteed your next 12 months, right? So you are at the behest of a business decision, and I've seen this happen on several occasions with some of my students where they've been in a 12-month lease with their entity, and another corporation came and needed a percentage of the complex's units, right? So their unit went on the chopping block. The next 12 months were not guaranteed to them, and they lost that. They had to scramble to find another place in some cases, or put the furniture in storage. And 12-month leases, in my opinion, are risky because you barely have time to account for your upfront expenses, to recoup those, and to see significant profit that should be worth your time and effort. Taking a 12-month lease, in my opinion, is not worth it. So my opinion is always to target and go after homeowners. One, because you then can manage and control the asset. And then back to my earlier point when I was talking to Chad, accessibility over ownership, right? You can leverage a space in ways that you can't dream of in an apartment, right? And if you really think about the sharing economy concept and what exists in the sharing economy, then you'll understand where I'm coming from, and you'll see, right, that the profitability, it's never meant to be in an apartment. Apartments get you into very specific places for very specific things. But that's not where true profit lies, unless you're in a unique situation where you get to have a couple units and aggregate them, or you have them working through a private investor, as we have in Louisville and Arlington, that you can hold on to the leases for more than 12 months and really start to realize your returns. And the second part of that, if you live in a big city, would you recommend jumping into, or live in a small city, sorry, would you recommend jumping into a lease? I don't know that it matters whether you're in a small city or a big city. It's about offering value, right? Where you can offer the right value in the market, your place is going to do well. And I can give you case studies across the country in places and other people, right, that have places in city center that don't do well because they don't offer the right value, and they're just one of everybody else. And now it's just a race to see who can get to $50 a night the quickest, right? And that's not the conversation you want to have. So how would I approach a homeowner, and what would I say? So the first thing I tell you is just to go onto my website and buy the course, right? I think it's running a special right now. I'd have to check it, but I walk through those specific strategies and all the resources required, the email script. There's some recorded phone calls with homeowners in there. Top 10 frequently asked questions that help contextualize what this looks like. But the very first part of all of that, or the most important part, takeaway there, is the market research and analysis, right? Because you've got to understand that you're putting value in the market first, right? Before you even call a homeowner, you want to know that you've done the research, and then the property we're going after to help fill that need in the market becomes secondary to it. But don't put the cart before the horse. So we want to understand how to put value in the market first, and then we then go target homeowners with the right homes to enable us to do it. But the thing I'll tell you is that each of my students, well, one, we've done it across the country over 50 times, maybe even more, with some homeowners that didn't sign on, but maybe came back, or they said, "Hey, we'll call you a year from now and see how things are going." But they're currently somewhere over 40 lease agreements across the portfolio with investors or homeowners. So we know it works, right? So again, that's not the challenge. The script and the method, it works because it targets investor-minded homeowners, and that's sort of what it's built towards, right? We don't necessarily want mom and pops that's just trying to make a decision based on their last 12 months of our rental history. We want to work with investors that get it, right? They understand what we're doing, that we're going to make a substantial profit in most cases off of their property, but they're focused on bigger and better things, right? So they allow us to take long-term leases on their properties and manage them, so it becomes a great partnership, right? And the other reason why is I'll tell you a story. Matt might be listening here live, but I'm going to put him on the spot. So here's an example of why this is so powerful, right? One email that went out resulted in 7 different properties, right? So send an email out one cold December night to a homeowner in Enterprise, Alabama, after doing some research, market research in the area. Matt called back. We had a discussion. He was good with what we were doing, and we struck a deal on his home in Enterprise, Alabama. Matt was part of a meetup group, a local meetup group with his fellow investors in the Enterprise area. Matt then brought that up to his friends and his other investors, and then what subsequently happened was 2 of those investors called me back, offered properties, and that one email then resulted now in 7 or 8 properties. I think the next one's coming up in March from the same investor, one of the same investors. So that's the other power of this, right? That you don't necessarily get when dealing with apartment complexes and sort of 1-for-1 deals. And anytime an investor has a good deal, then they'll often tell their friends, right? So that can instantly result in a situation much like the one I had with Matt and his fellow investors. So that's happened several times, right? So great question though. Okay, looks like that's all the comments that came in. So hey, thanks everybody for hopping on. Thanks, Chad, for your time. Thanks, Rochelle, for volunteering your time also. And for everybody else, 15 minutes, right? You can hop on the website, schedule a call if you have any specific questions or concerns, or you can volunteer to come on and let's go live, right? And talk about your questions or concerns, and let's just have an adult conversation about what's bugging you. But for everybody else, thanks, and we'll see you on the other side.